Welcome to this new week. I hope you all had a successful trade this week. And for those of you who do not have good trade this week, you don't have to worry. Next week, we still have opportunity in the market. There are a lot of opportunity in the market. So in today's video, I'm going to be answering most of your question when you ask me that how am I able to take trades with small stop loss and without waiting for any confirmation before entering the trade. The answer to that is that I already know like the area where the market is more likely to reject, okay, and that is what I'll be teaching you guys in today's video. I'm going to be teaching you the POI I use in taking my entries. And also last week I did not upload video about the 5k account. The reason for that is because I noticed that a lot of people love to watch the video from the Mental Educate playlist, which means the video where I teach you guys how to trade rather than me taking trades on my own like the 5k account. But I've actually passed the phase 1, so I'm actually going to be talking about it at the end of this video. So stay to the very end of this video. There are lots you need to learn from today's video. POI I use for my trade. In this video, I'm not explaining more about the strategy that I use in taking my trades. For you to understand it, the strategy I use for my trade, just go to the Mental Educate playlist and watch the structure liquidity video. So I'm going to be talking about little about it here. So we all know what POI is, right? Now for my entry, I mainly use two types of POI to take my trade. The first one is an order block. The second one is a breaker block. Now, a lot of us already know what an order block is. Another block is the last bearish candle in a bullish market, and also the last bullish candle in a bearish market. Now, a breaker block is a fade order block. What this means is that if we have an order block here, for example, let's say we have another block here, right? So this one is the order block. This red one is the order block, for example. Now, if price is coming back, market is supposed to respect this order block, then push back up in order for this to be an order block. Okay, market is supposed to respect it and push back up, right? But in a case whereby markets actually trade below this order block without respecting it at all, now this once order block is now a breaker block, which means a fade order block. Now if price is to return to this level again, there's very high chance that the market will respect it and use it as a resistance to push back down. That is simply what another block is. Now for the structural liquidity, let me just give you guys a quick run through on the strategy. We know that we have a POI here. Just like I said, for you to understand it more, you need to go watch the structural liquidity video on the Mental Educate playlist. And then market push back up. The first pullback is the inducement. We have break of structure. Our expectation is for price to come back, tap into this breaker block or order block, then move back up. This is one way it can happen like this, and also it can open like this. You have your order block or your breaker block, market pushed up. The first pullback is the inducement. Please take note of that. Also, you need to mark the POI that is closest to the inducement. Also take note of that. Another thing you need to take note of is after each break of structure and each inducement, new POI are formed, which means since we have our inducement here, now our expectation is for price to come back to tap into this POI. But in a scenario whereby market do not come back to tap into that POI, markets if market creates another break of structure with another inducement, right? Now our POI is going to be the one closest to the inducement. Instead of marking this one, we are now going to mark this one, right? We're not going to mark this one because we now have our inducement. Okay, we now have our inducement. Now price, after price, breaking structure, coming down to tap into this POI and then moving up. After price takeouts, let's say recent high or swing high, price might also come back to tap into the first one before moving back up. You get? I'm going to try my very best. There's a particular trade I took like this, but it has belonged on my Telegram. I'm going to try my very best to show you guys this particular trade. Okay, so after each break of structure and each inducement, new POI are formed. So that is another way the structural liquidity can also act. So here you have your inducement. Your POI can be a breaker block or another block. Here you have your POI also, and also here you have your inducement. Get it? Now let's move over to the chart and let me explain how I took this particular trade. Now if I go to the 4-hour time frame, if you watch the last video I uploaded before this particular one, I talked about how you are able to predict the market movements from the 4-hour time frame. Okay, what you should look for in the 4-hour time frame. Now let me delete this one. In the 4-hour time frame, the market is clearly in an uptrend, right? The market was clearly in an uptrend because we had around this zone, we had a change of character here, right? And then price actually traded to the upside, and then the market took out this highest point liquidity. This is a liquidity sweep. Now how do we know that this is a liquidity sweep? Because price did not close above this zone with a candle body. Price wicked from this zone, okay, which means there's a weak rejection. That tells us that market is actually respecting this zone. Now what we'll be looking for is that we are going to mark a POI, which means an order block or a breaker block, support or resistance level, that market is more likely to pull back down to gather momentum and then move back up. Remember that we are in an uptrend, which means if market gather momentum at the bottom, if it is going back up, the market is to create another high, which means another highest point. You get? Now we are going to mark, since we have our change of character here, before this change of character there's actually a breaker block here, right, which means this black breaker block, which means in other words there's actually a support at this level, right? So we'll mark that one. Then we'll go down to the 30 minutes time frame, right? Now in the 30 minutes time frame, this horizontal line, let me change the color to red. This horizontal line is our support level from the higher time frame. So what we are going to look out for in the lower time frame now, since we already had a weak rejection in the 4-hour time frame, is a market structure shift. Okay, to confirm that the market is actually going to sell to this zone and then before we buy back up. Now we add a change of character in the 30 minutes time frame. We add a change of character here. All right, now the change of character, after that change of character, we add our first pullback, which means the first pullback after a change of character or break of structure is the inducement, which means this one is our inducement. And then we add a breaker block here. Remember I said a breaker block is a feed order block. We add a breaker block here, right? And then we add a break of structure. Now our expectation was for price to now come up, take out this breaker block, tap into this POI and then sell down. Okay, I remember I also said after each break of structure and each inducement, new POI are formed. New POI are formed, which means if another break of structure occur here and new inducement occur, this first POI will no longer be valid, at least for now. Okay, and that was exactly what market did. Price gave us a break. This was a break of structure, right? So we had a break of structure here. Now the first pullback after that break of structure is now this level, which means this inducement, and then market now actually broke structure again at this particular level, right? This break of structure was for this POI, was for this IDM, and this IDM was the one closest to this POI. Now we had a break of structure. This break of structure is now for this IDM, and this IDM is the one closest to this POI, which means a breaker block. Now this is where the stop loss gets smaller. If I go to the 4-hour time frame, if you watch the video where I talk about support and resistance and my POI, if you watch the video where I talk about POI, this is actually a open close support and resistance. In this particular one is a resistance level. How do I know that? Because in the 4-hour candle, this order block, the body of this candle is at the same level with the body of this second one, which means as this candle close, the body of this candle is at the same level with this one. Okay, so we will mark that one out in the 4-hour time frame. Now you will now go down to the 30 minutes time frame to actually refine it and find the particular order block. You can use the 15 minutes time frame, 5 minutes time frame, any time frame at all that enables you to see it more clearly. But sometimes I like to use the 30 minutes time frame the most, right? Now this weak candle has already mitigated this breaker block here, which means this weak candle is now protected, right? The next unmitigated candle is now this breaker block that you are seeing here. It means this very one from the 4-hour time frame. Okay, that's why I marked the body of this candle to the upside, which means to the body of this one. You get, this week is no longer my concern because it has already mitigated a breaker block here. You get, and if I switch from candlestick to line chart, we are going to see the V shape. That's why you need to watch that video in order for you to understand this POI of 18. We are going to see the V shape here, but because I already know it, there's no need for me to switch from candle to line. But let me just do it. You see the V shape there. Now my stop loss will automatically be below the body of this candle. That's why I have my stop loss here, and that was exactly what market did. Now our target is for price to come to this order block that we mark from the 4-hour time frame. You still need to have that in mind. Okay, you still need to have that in mind. This is one that we mark in the 4-hour time frame. Now the 4-hour time frame, we will not buy from the 4-hour time frame directly. We still need to go down to the 30 minutes time frame to buy from it, right? Now you might be wondering, why did I not take my entry from this order block here? The reason is because this order block has mitigated this breaker block here, so this order block is now protected. Now the next POI that is not mitigated is this breaker block that we are seeing here, this breaker block. So my stop loss will automatically be below this breaker block. You get. Now if I go back to the 1-hour time frame, let me use the 1-hour time frame for example. The same structural liquidity that you are seeing, it is visible both in the higher time frame and in the lower time frame. Okay, we add a change of character here. Now before that change of character, there is an order block here, which means this order block. You can even see that in the 1 hour time frame, the bottom of this order block has mitigated this particular one here. You see that, right? So there's an order block that market actually mitigated this level, this order block here. Now the first pullback after the change of character, which is this one in the higher time frame, is the inducement. Then you add a break of structure. So you see that the structure, the entry model is both available in the higher time frame and in the lower time frame. Now once I took a buy position here, my take profit is going to be for price to actually come and clear out this highest point. Because in the 4 hour time frame, market will now create a new higher high for the bullish trend to actually be complete. You get? So it is as simple as that for you to actually understand how to get a smaller stop loss. Okay, so let me show you another example on USD on Nasdaq. Okay, and also I'm going to show you that one of my students actually caught the same trade, that same euro card trade, exactly the same trade, but his take profit is even higher than mine. Okay, and he is correct. Okay, because price is to take at that high. Now you have your first pullback. This week has already come to clear out this liquidity. So this week is no longer my concern. My concern now is with the body of this candle. The body of the candle. So that's why I put my entry there. And all these three entries are exactly the same thing. Okay. You have a long week here. This week clear out this liquidity. So my concern is with the body of this candle. So I'll put my entry at the very top. So that immediately price tapped in, sniper entry. This one this one is still basically the same thing, right? We have this candle push down to come mitigate these other blocks. My concern now is with the body of this candle, and if I switch from candle to line, we are still going to see the V shape there. I'm still going to see the V shape there, right? So you see the V shape in all the entries. Now let me go to my Telegram. Let me show you guys the before of that Nasdaq, of that Eurocard trade. I mean, so here is the before of the Eurocard trade. Okay, price is to come tap into the sell, come to tap into the buy, and then move to the upside. Now let me show you the same trade that my students actually caught, like the same exact same trade, right? Now you can see that it is exactly the same trade, and then I actually send my own to him that I just passed phase 1 account with Eurocard buy position. Now my stop loss here is very small. The reason for that is because this was all I needed to pass the phase 1 account. So I did not need the entire take profit. This was all I needed. So I told him that. So he sent me his own analysis. Then I said, your TP, like in my own language, in my own Nigeria, slang, I said my TP, I said your TP is even longer than mine. You see that his take profit is for market to come clear out this high, while my take profit is just around this level. So you see that it is basically the same entry. Okay, so that is it on how to get smaller stop loss. Now let me show you the prop firm account. You see that I've actually passed phase 1 because phase 1 here it shows disabled. Okay, if I enter, you can see that I've already passed the phase 1 prop firm account. Coming. So I trading the account the first time I actually went down to 9,016 dollars, because when I started trading the account I went into a drawdown, like a losing streak. So that was why. But then after that, I just gradually rose up and then passed the account. So I'm now in phase 2, but I've not actually taken any trade in phase 2. Okay, so maybe tomorrow or next week I'll take trade in phase 2. Now I said I was going to show you guys a good buy position for what I actually explained to you. So let me see if I can still find it here. Let's see. If you want to join my Telegram channel, the link is in the description below, right? Let's see, it should be around this level. Just hold on. This is it. Okay, now the first trade, this was the POI, right? This was the POI closest to my adjustments around this level, and then my target was for market to first of all come up. Since this new level has formed, new break of structure and new inducement, this one will now be my point of interest. Now I'll buy it to the upside for market to take out high. After market taking out that high, there will definitely be a pullback, right? Now this level at which I buy from to the upside is now also an inducement to another breaker block. I hope you understand. There's a break of structure here, there's a breaker block here. You get? So the first pullback now, which is this level, is now an inducement. Now there's another break of structure here, there's another pullback at this level. You get? So after price took out that high, market will now come down to respect the second level before finally moving to the upside. This does not happen most of the time, but just so I just analyze in the comment section. If you have any question, also drop it in the comment section as well. If you find this video helpful, please do it to subscribe and comment on this video. Passing the phase 1 account, actually it did took long than I expected. I think the reason for that is because of the news rule in the prop firm. Because if there were no news, it would probably take me about 3 trades to actually pass the phase 1. Because I actually closed out on a lot of trades just because there were news. I actually closed out in a lot of trades. And also it was because when I started trading the prop firm account, the first week I went into a losing streak. Okay, I think when I started trading the account, I lose 3 times. I lose 7 times in a row. Yeah, 7 times in a row. So I was actually able to come out of that drawdown and then pass the phase 1. So I'm actually going to be trading the phase 2, just trading it on my own, and then at the end of each video of me actually teaching you guys how to trade, I will talk about the prop firm account. All right. So thank you very much to staying to the end of this video. Stay blessed.